Hi everyone, it's Lorenzo Di Mattia, manager of Hedge Invest Ibila Macro Fund. I wanted to discuss what we have done in August and give you the outlook for the rest of the year. August was marginally negative. We thought the correction would arrive in August, and we bought puts on several indices, including the DAX, the NASDAQ, and the S&P. Unfortunately, it didn't really work yet. It actually did work in September, but it was premature in August. We did roll the options so we could keep a short position in place. The market went well beyond what we could imagine, and I guess most people would imagine. Valuations were already rich, but it kept going even higher. The main reason was the earnings in technology especially were still growing and actually accelerating despite a minus 30% plus in GDP, which is very unusual. And this made people extrapolate that earnings will continue to grow at this pace in the next few years, which we don't agree with. We believe that this is actually the last leg in earnings in a lot of companies, because a lot of businesses are mature now, and so this growth will not be sustainable. On the top of that, we believe that risk that Biden wins are real, and if that's the case, the tax rate will go up, taking out about $20 of earnings from the S&P at a time when companies actually need to work their balance sheet, which has been impaired by this recession. So at a time when the companies need to rebuild their balance sheet, a tax increase will impair profitability and making the balance sheet repayment much longer. And so capex from companies will be very, very low in the next couple of years. So we anticipate an earning miss and very low capex. The consumer has also been impaired. Without a big stimulus, the US economy, the global economy, without a big stimulus next year, we had the big one this year, but next year will be much weaker than expected, because the recession cycle, the impairment that the consumer and companies suffer in this recession, the lagging effect of this impairment still have to show into the economy. So we believe that next year will be much weaker than expected. And again, the election play a role, because if Biden wins, but the House is controlled by Republicans still, it's very unlikely that big stimulus will get passed, because Republicans would not have any interest in passing a big stimulus. Also because there won't be any urgency as we pass the phase of lockdowns. So the market will be in trouble for the next several months and probably the next couple of years. The only thing we don't know yet if cyclicals made it top already, because the virus is getting better. It might get better, and that aspect is important as well. But technology has probably made an important top from which it will move sideways in a high volatility range, 10, 15, maybe even 20% range, because of the extreme valuations. And value might, if the virus gets better, might keep being stable or even going higher for 3 to 6 months, and then also stop, because it has priced a lot as well. So we will play the range, shorting near the top of the range, which we expect will be reached again into the Fed mid-month. So that will be a very good short opportunity, and we will buy at the bottom of the range for the time being. We are still bullish on precious metals. We are playing the position size. We're a little smaller right now, but we believe that gold, silver, and especially platinum have big upside still in the next year or two. Platinum has a a specific reason, because of the electrification of transportation will need a lot of platinum. And we expect interest rates on the long bond to go up, but not a lot, because the Fed might introduce yield control. And we expect the dollar to move sideways in the next few weeks, because your positioning is pretty extreme on the short side. Thank you very much.